Have you ever asked yourself, how can I actually have a relaxed retirement with Bitcoin? Or maybe you already own some Bitcoin and are wondering what the smartest next steps are. That's exactly what we're talking about today. Together, we're going to unpack a detailed Bitcoin retirement strategy, and we'll do it in 4 simple but incredibly important steps. A little spoiler, each step builds on the previous one, so you can't just jump around if you want to lay a truly stable foundation for your retirement planning. It's best to save this video right away so you can watch it again and again as you implement your own strategy. In this video, I'll take you by the hand and show you a crystal clear path to not only secure your Bitcoin investments, but also optimize them for a worry-free future. Let's dive right into these 4 crucial steps. Our first and most fundamental step is to accumulate. And listen up, this is more than just buying. It's about a smart strategic approach both in collecting your coins and in building your knowledge. Your goal on this journey is to grow your Bitcoin holdings step by step while continuously deepening your understanding of this digital gold. Here's how you do it. First, knowledge is power. Before you invest even a single cent, it's super important to understand the true value of Bitcoin. How? By learning, listening to podcasts, and reading books. You'll quickly grasp why Bitcoin is considered such a valuable investment. What makes Bitcoin so special, so different from other financial assets? Take the time to check out the principles and properties that make Bitcoin so incredibly attractive. Just watching my videos here can help you understand Bitcoin with ease. Second, start small, think big. Once your Bitcoin knowledge grows, you'll probably want to make your first small investment. Start with a small portion of your investment capital that you feel comfortable with. This could be a fixed amount each month or a certain percentage of your income, whatever your financial situation allows. The key here is consistency. Regular investments help you cushion the risks of Bitcoin's price fluctuations. Third, build trust. Increase your investment. The more you learn about Bitcoin and observe its performance over time, the stronger your confidence in its potential will grow. This growing conviction is your signal to slowly but surely increase your Bitcoin allocation. For example, if you started with 5% of your monthly savings, consider increasing it to 10% or even more. Fourth, aggressive accumulation for advanced users. Once you understand the value of Bitcoin and are firmly convinced of its long-term prospects, you can accelerate your accumulation phase. This could mean converting other assets like stocks or traditional currency savings into Bitcoin. However, you should only make this decision after thorough research and with a clear understanding of your entire financial portfolio and your risk tolerance. Accumulating Bitcoin for retirement is an incredibly powerful strategy if you approach it with a smart plan. Start slow, educate yourself intensely, and increase your holdings with genuine conviction. Remember, Bitcoin is not just an investment. It's a potential cornerstone of your future financial freedom. Stay on the ball, stay informed, and adapt your strategy to market changes and your personal life circumstances. Once you've mastered these sub-steps, you're ready for the next step. The second important step on our journey is what we call hodling, which means holding on to your Bitcoin without selling. And this truly is the art of patience. Bitcoin is not a get-rich-quick scheme. Instead, see Bitcoin as a form of generational wealth. It's not just your path to personal financial freedom, but also something you can pass on to future generations. The best way to realize the full potential of Bitcoin is to hodl, which means stubbornly holding onto your Bitcoin no matter how wildly the market is riding its roller coaster. The strategy here is simple but requires a good dose of patience. Hold your Bitcoin for a very, very long period despite the often intense price swings. Why? Because Bitcoin typically increases in value over the long term. So why hodl? By holding your Bitcoin for the long haul, you can maximize its potential to explode in value over time. This approach demands patience and foresight, motivating you to focus on future growth rather than quick profits. If you consider Bitcoin as part of your long-term investment strategy, patience is your most powerful ally. Hold on through the volatility and the market cycles, and you could see rewards that go far beyond your own financial gains, reaching into the next generation. Hodling is more than just an investment strategy. It's a commitment to a future where Bitcoin plays an increasingly important role in the global financial world. Some experts say that the price of Bitcoin moves in 4-year cycles through bull and bear markets. That's why you often hear that any Bitcoin you buy should be held for at least one full cycle, meaning 4 years, before you even begin to evaluate the performance of that specific investment. If you buy Bitcoin and hold it for 4 years, its value should theoretically have risen enough for you to start spending your Bitcoin. And that brings us directly to the third step. Next, let's look at step 3, spending. But here it's important to do it with a plan. When the time comes and you want to use your Bitcoin to fund your retirement, you can start by selling it and converting it into fiat currencies like the euro or the dollar to cover your expenses. Or even better, you can use Bitcoin directly in everyday transactions to buy goods and services. The absolute key in this step is timing. You must have given your Bitcoin enough time to increase in value during the holding periods, as we discussed in step 2. This ensures that when you start spending, you only need to touch a relatively small percentage of your total Bitcoin holdings. Let me explain. Strategic spending means the goal is to spend less Bitcoin each year relative to the total value increase of your capital. This means that even though you are using a portion of your Bitcoin for living expenses, the value of your remaining Bitcoin assets continues to grow. Imagine the value of Bitcoin increases by 15% in 1 year. Your goal might then be to spend only 5% of your total Bitcoin assets. This way, your Bitcoin portfolio continues to grow despite your spending. Brilliant, isn't it? You achieve value preservation and growth by carefully planning when and how much Bitcoin you spend. This ensures that your total investment continues to increase in value. This strategy allows you to actively enjoy the fruits of your Bitcoin investments while simultaneously fueling the growth of your portfolio. It's a sustainable method for financing your lifestyle without depleting your assets. Essentially, it's about putting your Bitcoin gains to practical use in daily life while managing your wealth to ensure continuous growth and security for the future. With these 3 steps, you are already on a fantastic path to enjoying a fulfilling retirement with Bitcoin. But there is a 4th step that will take your financial planning to the next level. The 4th and final strategic step is borrowing. This is, so to speak, the strategy of the wealthy that you can also use. What if you don't actually want to sell your valuable Bitcoin but still need capital? It's simple, you borrow money against it. This method is a smart trick that many wealthy people use. Instead of selling their assets like stocks or real estate, they use them as collateral to get loans. Why is this so clever for you as a Bitcoin owner? First, intelligent debt management. By taking out a loan and using your Bitcoin as collateral, you retain full ownership of your coins. You can use the borrowed money for your needs without having to sell a single Satoshi of your Bitcoin. If the value of your Bitcoin continues to rise each year, you could even refinance your loan to reflect the increased value and often get better loan terms. Second, save on taxes and keep your Bitcoin. This strategy helps you avoid the taxes that would be incurred when selling Bitcoin because borrowed money is not taxable income. And the best part is you still own all of your Bitcoin and fully benefit from future increases in value. Third, rethinking old wealth strategies. This step takes traditional wealth-building strategies as used with real estate or stocks for decades and applies them to the digital currency, Bitcoin. By borrowing against your Bitcoin, you combine proven financial wisdom with the revolutionary technology of digital currency. This way, you get the most out of your Bitcoin while planning for future growth. So let's summarize. One thing is clear. Your path to a Bitcoin retirement requires one thing above all else, and that is conviction. To successfully implement a Bitcoin retirement strategy, 2 things are absolutely essential: a deep conviction and a solid understanding of Bitcoin. You have to fully commit to accumulating Bitcoin through all the highs and lows of the market. It requires real grit to hold onto your Bitcoin during the tough times of a bear market and to resist the temptation to cash out too early during the super profitable phases of a bull market. Constantly educating yourself about Bitcoin is crucial. The more you learn, the better equipped you are to handle the uncertainties and volatility of the market. If you liked this video and learned something, please leave me a like. It supports the channel immensely. I hope you were able to take away some valuable insights today. As always, thank you for your time and see you in the next video.